rupee, which has slipped to an all-time low as well today. In fact, it's now at about 90.63. That's the weakest that we are seeing on the rupee. And these record levels have been actually inching even higher as we see over the last 1 week, 10 days. Of course, like you pointed out, the foreign fund outflows, the US-India trade uncertainty, the widening trade deficit, these are all weighing on the rupee at this point in time. RBI interventions also seem to be less aggressive at this point. I wanted to just understand as to how should an investor look at the rupee right now? Why is the RBI not being as aggressive to contain this fall at this point? And what's looking ahead for the rupee going forward?
Well, I think to an extent, if we look at it from a different lens, I think from a Government of India and RBI point of view, letting the rupee fall to an extent is, par for the course. We want our exports to remain competitive, and in a scenario where the kind of tariff which has been imposed on us, the one way to ensure its competitiveness is to let it depreciate to an extent. And I think RBI is probably kind of holding back and letting the rupee depreciate a little more. Look, 2-3% depreciation annually is an accepted target. But I think depreciation beyond that is being allowed now to ensure that India remains competitive overall. And that is probably a conscious strategy which the government has adopted. Otherwise, probably this wouldn't have happened. As far as the apparent reasons which some of you counted, FII outflow obviously is adding to the pressure, and and a lot of other issues which are small but niggling are also adding to the pressure on the rupee. I don't want to belabor on those points, but the fact is RBI is not intervening the way they could have. Clearly indicates that the government is tacitly approving the depreciation to ensure export competitiveness.